G'day traders. Okay, so we're going into the last 10 days of January, and it's time to start trading for the year. For those of you that haven't started already, I'm personally going to start my live accounts again on Monday. So I'm hoping that many of you have followed the advice in previous videos of demoing 50 or so before you jump in live. Take that into the end of January and you'll be quite comfortable with your trades from Feb onwards. Now, we also have the swearing-in ceremony for Donald Trump on for us tomorrow, in actual fact. What I want you to take note of here is that there's every possibility that the US dollar would strengthen slightly as a result of the swearing-in. The market, in my opinion, has already factored in the uncertainty of what his policies may do. But for the interim, I think the market will most likely rally slightly. And that's for the US dollar, which will result in anything else besides the US dollar taking a bit of a dip. So just be mindful of that. If you see any signs of that, then trade accordingly. If not, then certainly just follow your regular criteria going into next week. But just Monday at least, just be slightly wary that there will be some tapering into the market as a result of the swearing in, but I think most of it's already been factored in. Now, something else that has been requested, and I've decided to move this up in my list of videos that I need to create, is pretty much patterns that you would need to start studying more in depthly so that you know exactly when to apply your criteria. Okay, the simplest way to do this, instead of me having to go through all the past charts and take screenshots, is to take advantage of screenshots that have already been taken. Now, best way for you to do this, just go onto google.com and click on images and then type in patterns. Now, the ones that I really like, these are the most common ones that I trade, and these would be the ones that you'd possibly, for forex traders in particular, you'd put more lots on them. And this would be the double tops, which we call also the M patterns, the triple tops. Okay, so triple tops, you'd see something along these lines where the market comes up for a third hit. So this is the first hit, first wave, second wave, third wave, fourth wave. This is where I normally say you can trade. But in this case, what you might have in regards to a triple top is where the market does go back again to retest this point. And the only times that tends to happen is when, say for instance, the market makers have a lot on their screen, they have a lot of money sitting up here somewhere, they'll come back for it. Okay, so in that case, triple tops, type in double bottoms or triple bottoms, and one of my favorites is the cup. Okay, so let's jump into it. That's the double bottom pattern. All right, we've got the double, did I say double bottom pattern? That was double top pattern. Now we have the double bottom pattern. Okay, so study them, pull them up, look to see what the market has done. Okay, and look to see where you would enter. Here's a good way to negotiate your entries, is if you used a trending line, like a channel line, and then wait for the market to break past that and then look for your entries there. Myself in particular, I look for an entry straight after the big push and then consolidation. So in this case, I'm not able to zoom this in further, but right there is you've got a big white candle and then a tiny red doji. This you could combine these three candles here and see that as a continuation pattern, whereby straight forex wise I will enter straight on after this. However, when it comes to continuation patterns, it'd be this white candle here followed by a red one, followed by another white one of like a medium size, nothing too massive. And if that occurs, that's an indication for you that this market's going to continue going up, and then you can take your entry on the next candle. Binary, you can actually do, so say for instance this is a 15-minute chart, you can do a 15-minute trade on this next candle here. Okay, for forex traders, you can either take your entry off of here straight after this doji, but if you'd like confirmation, then certainly take your entry straight on at the open of the next candle. Okay, now this can be done on a 15-minute chart. This can be done on a 1-hour chart. For those of you that have been requesting 4-hour entries, this is perfect for a 4-hour entry as well. And then you can also do this on, say, a daily chart. Okay, so study that. Study just this area here. If you can recognize these 4 waves, and you know that this market's come down and it's starting to push back up again, what I want you to do is just begin to study this area here, this behavior. Look at support areas in the past, and look at candlestick behavior, and then look at what the market is doing here. That's really all you've got to do. Forget about the whole general knowledge or the technical or fundamental knowledge of the market overall. All you've really got to do is to study areas right before a trend develops. Once you do that, then now you know that as soon as you recognize this sort of movement, the market's moving up, you know this market's going up here somewhere, you could do 2-hour binaries on that. You could do the 2-hour binaries on Nadex there. You could do Forex trades off of that. And realistically, this is the only thing that you need to master, just this tiny little area here. Okay, so jump onto Google, jump onto images and study them. Take note of what the candlesticks look like. Take note of the behavior. How does the market push aggressively back out there? Why does it actually do that? Why does it happen straight after the pin bar or somewhere following the pin bar? And I want you to use this information to then go forth and either recreate your criteria or make your present one much, much stronger, or just to even confirm what it is that you're doing. Okay, so by now most of you would be familiar with the double tops, triple tops, double bottoms, triple bottoms, right? And if you're not, again, study these charts more so, and you will become familiar with them. Okay. Okay, just before I go on to the next candlestick pattern, that's one of my favorites. This is a very common occurrence. We've spoken about this in the past, where the market on the 4th wave will push back up, and then there'll be some degree of consolidation, and that's usually where I look for my entries, right? You do want to look for those entries after the push up, and the reason for that for me is that the market actually has done its thing down the bottom here. Once they're consolidating, this for me is either multi-bar continuation pattern or just a single, even a red doji here would be enough to let me know that this market is going to keep pushing up, right? So look for your entries there. But the other thing that is key to all of this is the understanding that the market is not just going to go straight up like this. Some instances it probably will, but there's always going to be those moments where the market does push up and then it comes back to retest some critical areas. This, where you can find an average in between these 3 lines, sometimes this is much lower, somewhere down here, and you can actually draw just a horizontal line going across, and you wait for the market to come and retest those areas, right? You can draw your fibs in as well, and they might be at critical lines, either the 61.8, possibly the 50 as well, or probably the 38. But look at candlestick behavior around those points, and then again, wait for the market to bounce off that, and that's your signal that the market is ready to now continue on in its trend. Again, look for your entry opportunities there. So come back onto Google, study them. There's a ton of these patterns on there. So again, let's have a look at this one. For example, this is the move away. Most of us will look at something like this and say, I don't know what I'm doing here. And then you wait for this consolidation to happen, right? Consolidation happens, aggressive move up again, straight after this. And this you could well, this is an extended version of a double bottom or a W pattern, but if you notice closely, then there's actually 6 waves to this, where market did come down here. For those of you that would have jumped in early somewhere here, and you would have noticed that sometimes this tends to happen towards the middle of the Asian session. If you see this behavior happening, ignore it. Because chances are that the market's going to come back and retest at the open of the London or at the open of New York. So always wait for the actual open. Go into within an hour or hour and a half of the London Open, or hour and a half of the New York Open, to wait for the retest to happen. Market moves back up, and then again, see this consolidation area. it's straight after there that you're looking for your entry. So market wait for this green or white candle to push up to let you know that we're ready to move. Now, entries wise, notice how there's a lot of wicks on there. These are the wick areas that you can actually take your entries. Simplest things to do would be where you'd actually draw in some of your support resistance lines. You might draw in your Fibonacci lines as well, and then use that as where you would enter your trades. So in this case, even if this candle ended up being a tiny red doji and you were down here, somewhere, you still win that trade. So look for those entries. Okay, again, now that you know that the market is going to be trending up, you can actually do calls in these areas, right? So do that. Notice how here this wick comes down towards this middle section. Again, you can take an average somewhere along here, use the body of this candle, or develop your own criteria possibly, and say, okay, if the market comes back down here, I'm ready to do another call, because this market, you know, is going to do a bit of a continuation going up. Okay? Remember earlier we were talking about the trend lines or channels. See how this is a W formation? What you can actually do is draw your trend lines in, or your channels in. The green lines that I've got on our, I think I still have it actually. I've got it on mine. I'm not sure if I've got that on the template that you guys have downloaded. That's the dynamic trend lines. If there's anything that I use with them, it's this breakout strategy. Basically, it's where you've got your W pattern, it's breaking out. Remember where I said that you'll probably have some consolidation happen? The consolidation most likely will happen straight after this breakout, somewhere around here. So that's, again, between here and here is where you're looking for your entries. So the behavior that you're looking for here is market breaks out, pushes up beyond this line, and starts to consolidate somewhere. Okay, that is your trigger. That once the market's consolidating, it's not coming back, there's no massive long wicks to the low, then that's where you're looking for your entries. And where would your entry be? Your entry would be straight after where the market pushes up again. If it's like a decent sized candle, not a very long one. Because if you see a very long candle push up, chances are the next one can be a red one, or will have a significant body on a red candle. It won't be just to be a tiny doji, because there's been significant volume that's been pushed up, and then market will slow for a slight bit. So what you're looking for is like a medium-sized candle, nothing too big. So once that goes up, then you're looking for your entries. If there's a slight pullback beyond this line here, take your entry, do a call for the next candle. Okay. Again, remember this. If you've missed this behavior here, wait for the market to do another pushback slightly before it goes back up again. These are very common behaviors when it comes to how the market actually, price action wise, it creates itself, or creates the structures. Now again, double tops, double bottoms, triple tops, triple bottoms, you guys are now familiar with them. Write these terms down, jump onto Google Images, type them in, and study these. Next thing, the cup pattern. That's one of my favorites. This is one that I trade quite a lot when it comes to Forex. This is also one where I utilize the use of channels a little bit more. So the cup pattern basically is behavior like this, where the market is rounded, and then there's going to be a slight pullback that the market engages in, and so this is the actual cup part, and then the market does a bit of a pullback, and you've got a handle. The channel that's used is here. So once the market breaks outside of the channel, which would be this candle here, you can look for entries straight after that. Okay, let's see one that is a little bit bigger, hopefully. Okay, this is much bigger. This is on a daily chart. Now this cup behavior, market pulls back down. Now this happens for a while. Notice how on a daily chart this whole setup actually happens over the course of almost 8-9 months or so. Okay, so you've got this starting off in June. The whole cup behavior, actually not 8-9 months, we're talking about more like a year and a half. So from December to December here, actually longer than that. So about a year and maybe 7-8 months. So here's December to December there, and then this break actually happens straight afterwards. So where you would take your entry would be straight after this aggressive move here. Remember what I said earlier, that chances are that if you've got a excuse me, a significant breakout, there's every chance that there's going to be a bit of a pullback. It didn't happen in this candle, but it certainly happened in the next candle there. So when the next candle pulls back, you can wait for a small, I can't really see that clear, so you guys won't be able to either, but there is a small green candle that pushes back up there again. You can take your entry on the next candle. So, you know, this is how you could possibly look for entries for like a end of day trade as well, which would basically be you're looking for a continuation pattern on a daily chart, and your entry would be at the start of the following day. So if you see something like that where the market is now beginning to trend up and then or down, and then you see a small red or a green candle there, depending on the trend direction, followed by another candle of the following color. So in this case, you've got trending up, red candle followed by a bit of a green candle, which is decent size. You could actually do a call trade EOD for the next day. Forex wise, you can jump into that as well. So yeah, study that. Please go into Google Images, type in the cup pattern as well, and look for your entries. Now, keep it simple this year. Please stay the hell away from groups. As you guys know, I'm not a big fan of groups, because if anything, that's going to be more detrimental to you. It's going to corrupt whatever your frame of thoughts are. And keep it simple. Don't try and jump too much into technicalities. Don't try and make sense of something that doesn't make sense. Just keep it so ridiculously simple. Pick 2 or 3 of these patterns, or just master the double tops, triple tops, double bottoms, triple bottoms, the cup pattern. You can even do head and shoulders pattern. They're very common as well. So head and shoulders pattern, study them. Study the behaviors of what it looks like. I quite like trading these as well. And look for your entries. Okay, this is where you need to start creating these entries for yourself, because the head and shoulders pattern, the cup patterns, they all will lead you into some sort of a trend. The M or W patterns, they will all lead you into a trend, and all you're looking for is when the trend begins and then there's a consolidation, and then so what you're looking for after that is like somewhat of a consolidation pattern, sorry, a continuation pattern, where the market's now saying to you, yeah, we've slowed down to confuse people, now we're ready to move ahead again. So study just those areas, and if I can point you to those areas, it'll basically be that once you say you've seen a head and shoulders pattern, study this area here. See how the market is pushing down and then it consolidates. So where would you take your entry? Would it be, would you wait for this candle to push aggressively down again and then take your entry on this candle here? See, that's another strategy that's just been created. Okay, let me jump onto the previous charts. It's the same thing with this head and shoulders one, is where you're saying, okay, once the market breaks past this channel, where would you take your entry? Look for and establish your own little criteria there. If we can go back into double top, double bottom, same thing that applies here. Let's look at this. See this is a continuation pattern. Market moves up. You've got a red candle that comes down, a decent size, a medium candle pushes back up again. That is your continuation pattern. Where would you take your entry now? In this case, I'd always say candle opens. There's a bit of a gap here, so I probably missed that one. But candle opens, and then you've got a bit of a wick somewhere there. Take your entry. All right, so go ahead, study these patterns, and create your own entries. I'm going to leave the video there. I'm hoping that just this in itself is going to help you create something that's going to be extremely profitable for you in 2017. All right, all the best.